What's up, everybody? I'm about to bust a flow. All right, all right, all right. Nah, I ain't about to bust no damn flow. I ain't about to do that shit and embarrass myself. I'm about to jump into my start of the week pick 'em. Hello, everybody. Welcome back to our fourth episode of Bullish. We're doing this on Sunday. And if it's your first time tuning in, basically how it goes is Sunday, I roll through my top five ish picks that I'm looking at this week, why I'm watching them, who I'm looking at, all that good stuff. Maybe have some Catalyst Corner talk, about maybe things I'm not watching, but things that are super interesting, and maybe some parting takes as well. Thursday is more of a recap, still playing with some formats for that, but thinking more of like a recap, maybe bring some friends or shit on, just shoot the shit, drink some beers, and talk some stocks and money and shit, or maybe some ETFs that we're looking at, or some forex plays, just kind of shoot around a little bit. But without further ado, let's jump into it. It has been a mixed couple weeks for tech. On the Nasdaq has been a little bit on the correction territory. But that's to be expected in a healthy market, in my opinion. You're going to have some profit taking as long as it's not like a bubble bursting or something like that. It still remains to be seen if it's profit taking corrections. Shift to a different trend, right? Tech has been super hot since COVID started, but definitely I've been watching kind of grouping trends over the past couple weeks to kind of see where interest is lying for investors, and it really looks like consumer and industrial. I think it looks really good, and we'll go into some of the other stuff in a little bit as we talk about the stocks that I'm watching. But yeah, so for the last six, and the reason I say kind of tech's taking a little break, I mean, if you're into it, you kind of already know, but the last six sessions, tech and NASDAQ has been down five times over the last six sessions. So it's pretty intense. There was a late rally on Friday, but not much there. So yeah, let's jump into it. The stocks I'm watching this week and why. All right, let's get that going. I hope you can see my screen, because if you can't, I'm fucked. And I'm jumping in. I know I'm kind of redoing this one, but Tesla is still baddie for me. And the reason I like that is the bottom. The bottom, right? It sold off. Actually, it plunged as much as 21% over the previous week, but that's okay, because you know how I like to play. I like to play reversals anyways. So if you look at this on the year over day, you definitely see those highs that were popping out. But what I like about this is if you're looking at day over day, it had a really healthy bounce off of that 50 EMA. So I like to use EMA versus SMA or whatever. But that's just kind of how I like to play it. But it had a really nice bounce off of that, and hopefully can make higher lows and higher highs. That still remains to be seen. But a couple things I like about this one specifically, not only because looking at for me, I'm more of a technical analyst versus fundamental. I like to do some fundamentals, but I'm more technical. I like to look at charts and patterns. That's kind of what interests me and kind of how I see my strategy. But everyone's going to be different. So the first thing I look at here, definitely, if you're looking every day, it still looks like it has a little bit of correcting or cooling off to do. As you can see, this MACD, which, as we talked about, is the moving average convergence divergence. It doesn't look like it's come to a bullish curve yet. So that's still a little bit there. So that says to me, hey, we still might have some little bit of consolidation, a little bit of downtrending before we kind of correct the correction or make whatever the new normal is going to be. But the great thing about this, if you look over the past few days, for even though NASDAQ wasn't performing as well, still Tesla was coming in pretty strong. There's a couple things for that, and we have a few catalysts why I'm still watching Tesla. One, I love a good dip. I love a good gap. And definitely you can see that gap coming in for Tesla. Definitely had to break out of this downtrend in order to be. What I mean by downtrend is if you look at if you just look at the trend or how it's going, definitely in the downtrend. And these are super dirty lines, so do them yourself. But it broke out of that, so we kind of see that, like I said, that bounce off the SMA. A little bit of a hammer here, and as we talked about last Sunday, hammer is basically buyers are coming in to try to pull it up. It's usually the real body. So this part right here should be double the length of the wick or the lower wick. And you almost have that here. So a nice little hammer forming to kind of pull it up there. I like that about it. But also what I liked when I looked a little bit more into it, just from the technical aspect, is this nice little almost like a Adam and Eve double bottom. And as we talked about, I think it was our first week we talked about Adam and Eve double bottoms. Basically, it's a little sexist, right? That Adam double bottom is sharper, and, whereas the Eve is a little bit wider. Sexist, maybe, but at the same time, it's a pattern that you can play. The great thing about that is these are almost self-fulfilling prophecies. So people are looking at that, right? The other great thing that I see happening, not only with that Adam and Eve double bottom. And what I like double bottoms is you almost can tell what your price target is, because you take the difference from the highest in between the two dips to the lowest point here, and then you can add that number to the top of the highest point in the middle, and then that could be your price target. So I like double bottoms just because they're definitely a bullish play. The other thing about this one is, as we talked about, like, hey, that golden cross is sexy as fuck, and on the 5 minutes, it looks like it wants to golden cross on us. But we'll see how that. So I see a few different. I don't go off of one trend. I go off of multiple kind of indicators, and to me, Tesla has a few of them. I also like this part right here, this 360, let's say 361 ish, because it's touched it before. So this is proven as a solid support, which is why I love it. It tested it a few times over multiple days and it's still holding. Hopefully we don't keep testing it, but it looks like we have a really good bounce off of that. So not just the fundamental, the technical aspect of it, I also like the catalysts that are coming down the pipe. I don't know if you've heard of what Battery Day is, but Elon basically tweeted on Friday or something, hey, basically I'm paraphrasing for what he said. He said, watch this shit, bro. Battery Day is going to be a banger. And that's not what he said, but it was pretty much like, hey, there's some exciting shit going on. So on the 22nd of this month, they're going to have their annual shareholders meeting, and after that's going to be Battery Day. What the fuck is Battery Day? Nobody knows, but that's the great part about like an unknown catalyst, like all the speculation and the FOMO and shit. So that's why I like Tesla, looking at it for a reversal play off of that, maybe that 200 or 50 EMA, or wherever it finds that consolidation. But what like I said, when I'm looking at this and I see it like testing that a couple times or 3 different times in 2 days, but also having like a nice little double bottom here, crossing the 50 EMA, crossing the 200 EMA. So the short term thought about it is increasing faster than the long term thought about it. I guess that's how you can think about the golden cross. Like short term sentiment is moving faster than the long term, maybe more negative sentiment, and you can definitely see that in the chart there. So that's kind of why I like it. Also, there was definitely some good showings. I think there was something in Berlin, like they showed a supercharger there over the past week, supercharger equipment showing, and that was pretty well received and stuff. And that's kind of why you see some of that pop over the later part of last week with some of that good news coming in. But so yeah, I think there's a lot of good stuff to like about Tesla, especially like if you're a bag holder at the top, and if you don't know what a bag holder is, you're probably a bag holder. But like, but if you're on the top here, hey man, sucks to be you, maybe. But at the same time, like, hey, it's Tesla. Look at the charts. Take your losses, but also take your wins. Like I said, every 5% gain, I'm looking to scale out or take my profits. All right, cool. That's our first one, Tesla, and I'm actually recycling 2 from last week. I'm gonna go with Apple, and kind of same difference here. You definitely saw it's almost like a spinning top, but it's a spinning top, almost like a hammer. I think this would be considered more of a hammer or a spinning top, because this rail body here versus the wick is so narrow, but it's still double. It's definitely more than double what the wick is. But also it's a little bit off of the high, so I would say this is more of a spinning top. But anyways, that means indecision. And the other thing you see about this is still, like we looked at Tesla, that 50 EMA, it's bouncing. It's using that as support, building a base, consolidating. And what I mean by consolidating is moving to the right. It's bouncing between these 2 lines. So you can play this a lot of ways. I love playing consolidation points because you kind of know, hey, that's 1, 2, 3, 4, 5, like 5 or 6 touch points where it's touching this 110.93 line, 111. So you can play it on the bounce, until you see that it's not going to hold it, it's going to hold it, right? But at that point, your stop loss comes into play and you say, okay, if it breaks that, hey, sell it. I'm going to sell for a loss. But, that's how I like to play him, at least. But looking at this as 1-day chart, I don't know, because it does look like your RSI is going to cool off. RSI, is oversold or overbought. 30 is the oversold area, and 70 is the overbought area. So usually those are 2 points of correction. But as you can see with Apple, this motherfucker is gonna fly 80. It's gonna go to 80 without even blinking. Some companies can't do that. Honeywell's one we looked at 2 or 3 weeks ago, where like, hey, it doesn't really go above 70, but some of the high flyer tech stocks, they can really go super hot. As I've seen some go like 95 and not blinking shit. But anyways, from a technical aspect, I really like it because it looks like it's holding a really good support here. Multiple touches there. Not really too much in terms of like patterns from this view. But still, what I like about it is, hey, it's still before that kind of big sell off. It's still making highs. Like if you look at the patterns, it's making higher highs. It's making higher lows. It's super bullish overall. So even though there was like a correction or bubble or whatever the fuck you want to call over the last 2 weeks, it's still Apple. It's still a banger for me, and I like this as a reversal play off of that. Also, something that's going to be interesting this coming up week on the 15th. So I think it's on Tuesday. They're gonna have a virtual conference. So I like that because that's hype. They're gonna show new products. They're not gonna show the iPhone, so that's unfortunate. But also maybe it's not unfortunate, and I'm gonna tell you why in a little bit. But basically, they have a conference set up, a virtual conference. I think anyone could go to it. I mean, obviously, right? It's just one of those showcasings and shit. But they're gonna show the new Apple Watch. They're gonna show the I think like their new iPads and stuff. So they got a whole bunch of new tech. I think they have something called an AirTag. I don't know what the fuck that is, but basically they're showing a lot of good shit. So people love a good virtual conference, especially for Apple. So I think we'll definitely see that in the upcoming week in terms of a reversal from the bounce, making really good gains and profits over the next couple weeks, especially as up until that point and after, depending on how it's received. But also, that just means 2 virtual conferences, so double the opportunity for that FOMO, for that catalyst to come in, because then they're going to have to talk about the iPhone at a later date. The iPhone shipments have been pushed back, like I don't know how long, but this is good. It's been pushed back a little bit, but basically that's 2 virtual conferences to me, which is why I like it. Splitting that up. So yeah, Apple and Tesla were kind of recycled, but still, hey, I've talked about them for 2 weeks now, and both weeks I've played them and I've been happy with it. So hey, that do it how you want to do it, but you know me, I like a good reversal gap play. The other one I want to talk about, fresh off, is going to be FedEx. And FedEx, this is the one I'm struggling with because FedEx has earnings on 9/15 at the end of day. So we're a little late to the party looking at it right now, and that was my fault. I should have looked at it last week before last. I just didn't think about it. But FedEx is an interesting one because they actually had a 21% increase from their last earnings on 6/30. And what do I mean by that? So, okay, they had an earnings call here. Hopefully you can see this line again if you can't. I'm fucked. They had an earnings call. Oh, sorry, that was 3/17. That was before that. That was during COVID, though. I was trying to look back to see kind of how they play on earnings. That was 3/17. That was just very unfortunate. It was during COVID, like right when we started like really, really understanding the impact that it was going to have, and buyer sentiment was just really bad. I also think it was a bad earnings overall, but there's a lot of stuff compounded into that. So yeah, 3/17 was 2 earnings ago. I mean, I don't think you can draw many conclusions from that one. I think I took a little step back too. Yeah, I did. It's 12/17 ish. Not a lot going on there. I think they actually missed expectations here. COVID happened and stuff, but this was the one that I remember more recently because I was kind of watching it then. A 21% increase for earnings. They really beat expectations though. Like FedEx is a real strong COVID play because everyone's shipping stuff. No one's going to stores. A lot of different tailwinds for them. And I think it's going to be more of the same this last one. Just kind of looking at, so FedEx has earnings, right? Their charts are looking a little bit, we'll go over the charts now, but let me talk about the catalyst first. There's also recent price target increases, Citigroup and Cohen. So they have, price target increases. You have to take those with a grain of salt because any analyst can give them a price target increase. But when you see some of the big ones like Citigroup or JP Morgan, Cohen's one of them, WeBush or Bushwell or whatever the hell they're called. When you see kind of those big boys, big girls talking about price target increases, that's when I take notice. So I saw a couple numbers. I tossed 260. I tossed 260. 260. I saw 264 price target increases. So what I like to do is if I see like a bunch of them, I'll basically just take the average and use that as like a smell metric. Like, oh, cool. Like it might hit that. I don't take the high. I don't take the low. I take the average of what I see and use that as like a guesstimate, right? Because who knows? I mean, but what that means is people are seeing what they're capable of. They're increasing their price target. So what they're capable of. So if you split the difference of the ones that I've saw, it leaves you at 262. Still a lot of room for that up here. And the chart definitely shows that it's capable of it. This is looking at day over day. And one thing that's interesting to me is this motherfucker looks like an ascending triangle. It's definitely hitting that 232. And the reason why I picked 232 is because if you look over, like basically I'm following the prior trends, right? I'm looking back 3 years and saying, okay, what are the highs that it hit? I mean, it's no like it's not like a coincidence that it's hitting the same things and not going past. It's not rocket science. It's just stock trading. That's why I like technical analysis because you can just follow it. Hey, there's a high here. Boom. a double top here, double top here. You know, that's a fucking four top, right? Really, and it really cooled down after that one. So that's a really strong one, you know. But basically, just kind of like charting it out a little bit, right? Basically, that's what I'm doing here, and I'm seeing here. Hey, basically, this was a double top ish at 234. Again, hey, no coincidence. This chart stopped here and hasn't moved past it. So I'm gonna play this one or two different ways. I'm gonna watch for the break of this. If it breaks it, I'm going to play it, and I'm going to use this 234, 233, whatever the fuck, as a stop loss, saying if it goes under that, I really don't know what it's going to do. I mean, I would guess it's going to land somewhere here, 119. That's kind of far off, so maybe not. But anyways, I'm going to say, hey, if it breaks this, I'm not saying I'm going to play it. I'm going to be looking at it really fucking hard, harder than I am now. But if it doesn't, if it bounces off of that, I'm going to watch where it's going to fall, play the reversal play. So I like playing earnings either one of two ways. I watch it, and I if it breaks what I suspect is the resistance, then I feel comfortable getting in it for my little 5%, 10%, whatever the charts are showing me, or I'm going to play that reversal because it's making a double top. Here it's hitting it twice. It could be a good reversal play down. Hey, we'll see what it does. But when you really get into it, it's in the triangle. So usually with this, when you see a lot of, and you see volume over average, that's what we're showing. The volume, this is the